Good morning, good afternoon, good evening, everybody. And hey, Smoking Barrel Nation. I'm Rustin Edwards, based in Geneva, a nice chilly fall autumnal Geneva, with my illustrious soon-to-be Papa, Mr. Matt Stanley in Dubai.
You got it. You
Tick
got
tock,
it.
tick tock, Matthew, tick tock.
Yeah, exactly. All good. Yeah, it's good. I mean, look, the as the weather cools down where you are, we're hoping for it as well, because still 40 degrees here, but all good. Hello nation, hello TSB nation. Hope all's well.
Well, it's downright chilly over here, man. You got the frost pipping up on the lawn this morning. I mean, it was a bit of a beautiful autumnal morning. The leaves
Really?
are starting to change. It's all coming into that nice winter season, which means gas oil demand coming front and center. And what a bang schmacker of a gas oil story do we have? Thank you, Mr. Vladimir.
Well, yeah. I mean, look, we said it we said it for a while now. Not that we're being, tapping our own backs, but a little bit. But we've been banging the gas oil drum, and I said the same thing last week, exactly the same. The gas oil diesel story was something that was fragile anyway in Europe, across the world. What's going to happen? Is it a nat gas story because it's a secondary power generation feedstock for heating in Europe and Northern Europe, States, Northern America? And then suddenly last week, Russia temporarily banned exports of gasoline and diesel. And whoosh, up we went, didn't we?
Well, and I think some clarity on the ban that they put in place. So, I mean, it's a ban to waterborne export markets. They're still supplying the CIS nations, which are borders to Russia, i.e. Kazakhstan, Turkmenistan, Tajikistan, Belarus. So those supplies are still moving out of the country. And according to the Brazilian energy minister, they've been told that their contractual supplies will also arrive. So that has to be seen. If only there was a way to track ships loading from Russia going to Brazil. If only.
What is this before me? Yes, let's have a little Christmas cookie lookie, shall we?
But the one thing about that, if the Brazilian energy minister is saying that they're going to get their contractual allotments from Russia, what about all the other countries that have been receiving barrels from Russia?
Now, that's a very good point, because the cynical old man in me thought, have they played all their cards when it's come to OPEC plus, i.e. we're going to voluntarily cut off 500,000 barrels production, or 300, whatever it is, that will cause flat price to rip. Is there some politics at play here that maybe they'll say they will ban waterborne exports, as you just clarified, and then maybe they don't do it quite to the extent that everyone feared, but the effect has been felt because someone said it? Maybe.
Well, I think there is a bit of talking the market up. When you think about what's going on in Russia right now, that would help facilitate a cut of exports of gasoline and distillate. Refinery turnarounds, and refinery turnarounds in Russia are a very large scale this year. For the last 2 years, it looks like they've held off on their turnaround schedule. And now they've increased the amount of turnarounds they have coming in, especially Q3, Q4. A few 100,000 tons of refinery operations being shut down, and you have a bunch of secondary units that are being shut down as well. And therefore, you end up with a natural tightness that happens because, you're not running your refineries at whatever utilization rate was going on before you made the announcement.
Yeah. And look, our guys on our research team, Victor and Matt, the freight analysts, have written some really good stories. But look, this is the kind of how reactive people are now. As soon as this ban came out, it's amazing how much the trading market has evolved, or the trading supply chain infrastructure has changed. Because as soon as the story came out, the questions we get asked now, being front and center of analytics and flows and what's happening in markets, we get questions that perhaps the market would have spoke about internally. Now, where is it going to come from? Who's got them extra material? Is there alternative supply available? What will happen with crude runs in Russia? But look, I mean, looking back on a retrospective basis, what we've seen with the unfortunate situation in Ukraine, the ongoing conflict, the seemingly escalating conflict, where people are US and, the talks with Zelensky and tanks and F-35s being given, seemingly it's not going away anytime soon. And what does it all mean, within the prism of energy supply in Europe? I mean, look, just going back to your point, where has Russian gas oil gone since the conflict, right? So what we do, let's go back to pre-invasion, which was March 2022, right? So let's go back further. Let's go back to September 2021. So Russia exported 3.2 million tons of gas oil and diesel, 2/3 of which went to Europe. That's Western Europe, Northern Europe, Southern Europe. So I'm pretty sure you all know your Never Eat Shredded Wheat compass, and you'll be able to work out which countries those are in. Contact our sales representatives for more details. Like, comment, subscribe. And then you've got August 2023. Russia exported at 25% higher exports compared to September 2021, 4.2 million tons, of which, Rustin, how much went to Western, Southern, and Northern Europe?
I'm going to guess zero, Wink.
Zero. 2 million tons just under went to Turkey, and then the rest is fairly well split. But what you've got is where Europe were taking 2/3 of that gas, or now market share, a lot of it's going into South America. 70%, as Matt Wright said last week, 70% of Brazil's gas oil now comes from Russia. 2 years ago, it was negligible, 2, 3, 4, 5%, something like that. So that's 770,000 tons of gas oil that's going from Russia into Brazil. Who is then losing out, right? Because it's not, oh, look at that, there's more market share that Russia have gained. That means that someone who was supplying is now missing out. That's the US Gulf Coast refiner. But what's happened is that the US Gulf Coast refiner is also taking market share back from Russia because the Gulf Coast refiner is supplying Europe. So it's just a big sort of circle out, not of the same product, but you can see how much trade patterns have shifted and how much people, hence why things are more expensive and so much more fragile than they were 2 years ago.
And you increase the lead time of your supply of goods, and nevertheless, you end up with a lot more variability in supply, and that's where you end up with shortfalls and lack of supply coming in. I mean, if you think of, Russia was right next door to Europe, and you were bringing in close to 3 million tons of monthly into Europe on a very short time frame, 2 to 3 days, when ship load to ship delivery. Very easy to keep the system wet, keep it full, and make it well supplied. But now when you're talking a 20-day lead time, when you're thinking about if you're even coming from the closest refining point, either US Gulf Coast or Saudi Arabia, 20 days to get into your port, that creates bottlenecks and also creates logistical hampers, because if you have one storm or one issue that blocks supplies out of the Atlantic Basin, you tighten up the market rather quickly. Now, the artificial tightening done by Russia is an interesting play, because one of the reasons that Russia exports all this product is that they have far more refining capacity than they have consumption inside the country. And so when you think of everything they export, it's all because they don't have the internal demand to absorb it, and they have more. They can produce more refined goods because they do have a lot of refining capacity. Now, the one thing about the tie-up that makes this political, as we said earlier, is the fact that you've got Russian refining turnarounds, roughly 3.5 million tons of refining turnaround coming on here in Q3 and Q4, which is a fairly substantial amount of refining CDU processing that's going to be offline. The question there is going to be how much of that translates into more crude being moved out, because, okay, you're not running the crude, therefore you got to do something with it. You're not going to shut in your oil fields, especially in the northern fields when you're coming into winter, because trying to restart an oil field that's been shut in a cold environment is very problematic as you get into the depths of the winter in the northern Russian fields. And I think the other piece to look at is, do we start seeing floating storage build out when you have all these clean tankers that have been moving all this gas oil? Are they going to just load and sit because they're not allowed to go anywhere?
Okay, yeah. I mean, this is a very good point. One is politicizing the flow of the world's biggest industrial use fuel, which Russia are doing, causing it to spike. Okay, 2 points here. Let's boil it down to what it means on the trading strategy. Now, I've been bullish gas oil cracks for a long time, as you know. I know you said they're relatively expensive, but to me, the trade is to still buy gas oil cracks out to probably Q1 now, and I would buy freight. I would buy TC5.
I mean, that would be, the freight one I could probably buy with, again, I'm not a big fan of buying cracks or any type of material when it's at an extremely high extended level, because how much more upside do you really have, and how much more can that market move higher?
Well, yeah, that's fair. But I mean, it's only when you're comparing it back to previous years and you look at seasonality and what it might mean, trade flows, how they've evolved, but not when fundamental demand supply has been so fragile. And that's why the market spiked so much last week.
And the market collapsed on the next day.
Yeah, true.
Now, because that, if you want to think about fundamental supply and demand, just look at the PMI figures that came out on Friday. You still have a contraction in PMI data across the Northern Hemisphere. China, OECD nations, Europe, United States, all the PMI manufacturing is still in contraction, which is a big consumer of distillates. PMI service level in contraction, which again, that's your secondary service level. People are taking airlines, bus trips, what have you. So if those are still contracting, maybe the net impact of losing this diesel supply may not be as hard felt as people expect, because you don't have that underlying industrial base clamoring for more diesel. I mean, freight rates still have not recovered from where they were. Trucking companies are still not moving as much freight as they'd like to move. You look at the latest releases from FedEx, from JB Hunt and Associates, they're still not seeing that demand pull of goods from the consumer to justify running trucks and burning fuel. And then you throw in the fact that it's a high price.
Yeah.
And so that curtails demand all into itself. And so as you add those factors in, yes, it's going to squeeze the market, it's going to reduce supplies, but is it really going to squeeze it to a massive extent where there's a big sucking sound of every tank in Northwest Europe and they're all empty? Okay,
fair. Yeah, the recession story is still there, high interest rates, inflation. But is that argument strong enough about the weak PMI data? Would you translate that into a market that is overpriced and you would sell? If you can't buy gas oil cracks, then would you sell them? You'd ignore them.
I would ignore them. I mean, I would. It's standing in front of a freight train. Is it going to stop?
Okay, fine. But we're talking about, look, yes, anything that looks expensive, you really want to buy it. If buyer's remorse kicks in. But I can't. On the other side of it, if you're not a buyer, are you a seller? No, I'm not. I'm sitting on the fence. Come on. We don't sit on fences here, Edwards.
That's the perfect hedge.
So we run a flat book, and then that gets a lot of content going. No, look, I mean, it's a funny one, isn't it? And it's an interesting one because, I think a lot of the market's hesitation, oh my God, buy it. Oh my God, sell it. Oh my God, I don't know what to do. And the sort of reluctant attitude, I think, that a lot of people have in markets right now, which is why we're still fairly range bound. We're on the higher end of that band right now. Arguably Brent is as high as it was in a year, but in the grand scheme of things, for as fragile as markets are telling people that they are, I think it's quite difficult to form an argument. I would say it's difficult to form an argument to put on a proper trading strategy right now. But I would say that it's easier to form an argument to buy things than it is to sell things in the energy space right now.
I would only say that the hardest part about buying energy is the fact that the valuations are high.
Yeah.
That's the only thing that makes it hard, because cost of capital is a lot more than it used to be. So if you're looking to buy physical barrels, it's a lot more expensive to hold that physical barrel, holding in the cost of capital. Interest rates are not going down, they're staying flat and potentially will go higher. So that right there precludes a lot of trading activity around the physical market. If you're buying the derivative market, your margin calls are up higher because you're at a higher flat price environment. So you have a lot of expense in holding a paper position. If it goes against you, it goes against you. I mean, if you bought gas oil cracks on Thursday, you were really hurting on Friday.
Don't blame us. Don't write in. There's no one on the other end. Okay, look, we'll agree to disagree there. I mean, I would still be a buyer, but I would exercise on caution there. But I think freight is certainly one to look at. That's myriad reasons really, but the fact that where is all this oil going to go if Russia are not exporting it is a very good point. Anyway, look, talking about resupplying the market then, The one, which returned from APEC, as we said last week, do China step up, as we saw them last year, in terms of supplying Europe with gas oil? Now, look, in the grand scheme of things, how much Europe need, China were not negligible, but one of the smaller suppliers. But they'd never been a supplier before during winter of gas oil or diesel. Never. The occasional cargo we saw, one cargo in July 2018, which went to Eastern Europe, but it's probably more blend optimization or something, or cheap freight. Whereas December last year, we saw China export 500,000 tons to Europe to obviously pick up the slack from Russia.
Well,
we're starting to see it pick up again now. So there's nothing at all throughout this year. And then we've got 200 KT going in, 200,000 tons from loading in September that's heading to Europe. Do we see China pick up a lot more slack than they'd previously been doing?
Well, I think, the whole issue around China is the fact, okay, they are running crude, they're running their refineries very strong. Yet their internal demand does not seem to be that strong. I mean, if you look at their whole construction industry, it's on its tail end. I mean, the property market, we've been talking about this for a long time. A lot of the property developers are having financial difficulties. Projects are not being done. Yet, everybody seems to talk about, oh my God, the demand must be great because they're running these refineries hell-bent to leather. Now, they're also got a large export quota that they're pushing volume out.
Yeah.
So, my take on the whole thing is that running the refineries as much as they've been doing, is a GDP play more than anything else in China. They need to show that 5% GDP growth and buying crude and exporting products creates GDP.
Yeah.
Now, can China step up? I think they will step up. Now, will Chinese gas oil actually make it into Europe? I think some of it will. But I think you'll probably just see this wave of displacement where Chinese gas oil moves into one market, pushes out more markets from another supplier, which then finds its way back into Europe to fill in the gap. Now, the one issue with the Russian curtailment that I see is that it's not like they've changed where the flow is going. They've just stopped it. And so if they stopped it, that does create the artificial shortfall in the marketplace. It's not artificial, it's a real shortfall, because you have nothing else. They're not pushing their gas oil into another market, which is going to displace other barrels into it, like we saw already with the Russian flow displacing your US flows and causing a complete change in trade patterns.
Yeah.
But I think it's going to, the proof is going to be in the tasting of this pudding. And that's going to be exactly how do the ports stack up? What do the ships end up doing? How many, do we start seeing floating storage, or do they honor all of their existing contracts they have? And so what becomes a shortfall becomes well, yeah, we said that, but we have commercial commitments we have to make.
Yeah, but okay. Is it the floating storage, which would imply that the material can't go anywhere? I mean, the material's still being bought and consumed.
Well,
it's not.
No, to me, it would be if you load a ship and it sits there, that tells me that Russia truly is not even honoring their contracts. They're just not going to export to the market.
Right. So they're just withholding supply to push the price up.
Or, well, to depress the price inside the country, because they were tackling an inflation issue inside Russia by reducing the cost of consumer fuels there. But nevertheless, it does cause, and I don't think it's a price game. I think it's just more of a pain game. Because we're going into harvest season. You increase the cost of harvesting, which translates into higher inflation, which translates into higher consumer discontent in a lot of the countries that are supporting their adversary in the current conflict. And so if that's their end game, because they did it with nat gas, but now that's been solved, what's the next one? Oh, we can do it with distillate, because that's the next big fuel that everybody needs.
Yeah, and look, we come back to something here which we mentioned again last week. And look, viewers, we are not struggling for content. If you think that you have tuned into last week's show, it's very much that this is front and center and is consuming newspaper columns across the world. I wonder if, again, political games, are they poking the bear here and saying, okay, this is what I can do to gas oil prices in a day. Okay, yeah, they came off the next day. What are you going to do, bureaucrats within The Hague or wherever you are? Are you going to increase the price cap? Because I haven't read anything on the price cap. I Google it and some nonsense comes up. So about someone's hat. So it's like, it's pointless. So when is that bureaucracy? Are Russia just playing some dangerous games in order to show up just how bureaucratic the EU are?
Well, they might be doing that, but I think they're also just showing, how the price cap really has no teeth. Because how much crude and how much product has been exported out of Russia, and everybody can say for all intents and purposes, we've been well above the price cap now for 2.5 months. Yet products and crude flow.
Well, I'm just looking at
flow unabated. There seems to be no problem in it. The only curtailment in product and crude flow has been what Russia says they're not going to export because they're trying to support the price.
Yeah. I mean, look, I'm looking on all our data, which goes back to 2013. Russian exports of all products, 36 million tons. That was the highest ever been. That was March this year. September this month, we got 32.4 million tons, which is like the fifth highest on record.
Yeah.
So to answer the question, no,
exactly,
nothing's changed, and arguably, it seems they have more leverage than ever. That's a very sad state of affairs.
Well, it almost goes back to, we're talking politicization of energy. Is it more that the United States and Europe are a paper tiger when it comes to actually curtailing Russian energy flows, because they can't weather the storm that will happen inside their own countries if they did that, if they actually put teeth into everything they did, and they actually stopped, they physically embargoed the oil flows, one way or another. I mean, if they just said, if you're touching Russian oil, you're going to be sanctioned.
Okay, it's a question. Would you say that Russian oil is still moving, even though there are less Russians in Russia to move Russian oil? That makes sense. The whole sort of the way and the MO, the modus operandi, the way that things actually get moved is no longer happening from within Russia itself, but is from, I mean, arguably the UAE have taken on, a big population has moved from Russia into Dubai and Ras Al Khaimah and other Emirates. Is a lot of it being sort of managed outside of the country now to keep Russia moving?
Well, a lot of the Russian trade flow was managed outside of Russia. I mean, Geneva was a hub of Russian trading activity.
Yeah.
The likes of Litasco, Gunvor, Mercurium, made a lot of money. Trafigura, Vitol, they all made a lot of money moving Russian oil. BP, Shell, Totsa. Yeah. Now that flow has been shifted to trade houses in Dubai. And so, yes, I think there is my own personal opinion. Yeah, there is a movement of the people who handle the exterior logistics flow of Russian oil have changed location, and they're all focused in Dubai now.
Dubai is the new Geneva, I think the FT quoted me on a few weeks ago.
Yes, he did. Yes, they did. I still think you have the people inside Russia still doing the logistics they did before. So it's not like you've lost those people. It's just you've concentrated everybody who was doing it here in Europe, between London, Geneva, Zug, are now sitting in Dubai all together in one big happy family. And they're still doing the same job they were doing 2 years ago in London, Geneva, and Zug. Yeah.
I mean, look, just to stay on the Dubai story just for a moment while I indulge myself. One of the stories that came out of APEC as well was this. I mean, when I first moved here over a decade ago, I was one of the only brokers. And like I said, I should have done a lot better, considering that there are now 10, 12 brokers. But it goes to show you how much of the sort of trade flow is moving here, but was moving here anyway. It just happened to be, regardless. A lot of that Russian flow, like you said, from Dubai, from Geneva and other cantons in Switzerland has now centered in Dubai. But arguably, this is the new sort of trading where trading activity is happening. NOCs, national oil companies are optimizing their own trading benches now. So I know it's kind of all come together at once, and it's a real success story,
Well, it's a success story that could be wrought with a lot of anguish and pain as things develop over time, but we'll see what happens. I mean, how much do governments actually go after these people? Is that going to be an attack that is taken or not? It's still yet to be seen.
Yeah, but let's not talk about that bit because I want to stay here.
Yeah.
Anyway, so what else have we got going on? So we've got Brent at 93.88, which is
Well, I mean, I think if you want to talk about shortfalls in the market, I think the other interesting thing that's happened, which didn't get a lot of press, is the fact that WTI has become a bit of a problematic contract. Just as we had back in COVID, where we had a negative WTI expiry,
yeah.
because of the volumes that are sitting in Cushing storage, you now have a contract that's become squeezable to the upside. Not that I'm advocating people manipulating markets and squeezing markets up. However, because of the lack of crude that sits in Cushing tankage, it's now become a point that as a deliverable physical contract, where Cushing, Oklahoma is where the NYMEX crude oil contract gets physically delivered.
Yeah.
That could become a problem as we go into wintertime as well. You do have a lot of refineries that feed off of the Cushing tankage.
Yeah, I read this, and I think, anyone who's sort of not involved or on the periphery of what we're talking about here, read the article. I think Bloomberg, who wrote the article saying that ATMI, which is the US division of Total, are squeezing or putting extra selling pressure on that market, or
buying pressure. It was buying pressure.
Buying pressure last week. It was it did go up 93.74. It closed out, and that was
yes.
Yeah, that's that was high. I think a lot of people should read that article. I don't know. Look, WTI is an interesting one. I think one that will probably be a story that will continue to develop because now it's deliverable under the dated Brent contract as well, or Midland is, and it's been quite remarkable how quickly Brent market has adjusted to Midland being part of the pool. People were worried about that. It adds different dynamics because obviously geography. But yeah,
well, it's deliverable, so you have to bring it into Europe to make it happen. But that pulls it almost says, what is the relevance of Cushing at this point? Because if you've got an export market and you've got all this other production that comes into WTI Midland, which then goes into all the export facilities, Cushing just kind of sits there as a empty blob that doesn't get used unless there's a contango structure or a flatter price curve in the market. Then what is the relevance of that to actually anything else other than a playground where people can play financial games on squeezing upside or selling down into the market?
Yeah, it's a good point. I mean, our crude guy in the States, Matt Smith, he wrote something this week, which is really interesting, that the US petroleum exports surpassed those of Saudi Arabia last week. So that's the first time in history that's ever happened. It's just above 7.5 million barrels a day, but that's the first time that's ever happened. Now, look, that's a combination of things. Saudi's got higher refining capacity now, so a bit more staying domestically. They've got the voluntary cuts as well. But also, the US has quietly been going on this increased energy path for a while now, especially in terms of exports, especially in terms of what we were just talking about with the dated market. That's a real look. I'm embellishing it. I wouldn't say it's seismic. The US are taking over Saudi in terms of exports, but it's significant because it goes to highlight how much things are kept under the, on the edge. Sometimes people don't necessarily write about it. So yeah, that was a good piece by Matty. People should reach out and try and read that. It's very good. It's first time that's ever happened in history.
Yeah, and it just shows that U.S. refining capacity is still pretty robust despite stock levels in the United States. To me, it points to the fact you don't have demand that requires more level of inventory in the United States. And therefore, what's the relevance of the current stock levels that people are trading, saying, oh my God, stock levels are so low, yet you don't seem to have any stockages or outages and a bigger incentive to export than to keep the barrels internally. Because if anything, if retail demand was that strong, you would have higher retail prices, which incentivize less exports. But if we're exporting crude and exporting product out to the world, then the United States obviously must be a slightly overbalanced market. Or oversupplied market, overbalanced. Oh my God.
Yeah. No, I agree. Yeah, no.
But anyway, I think that's all we have time for today. I want to say look out for our short series that's going to be coming out.
Yeah,
Different
Edwards
topic
101.
matters. Edwards 101 starting up on Fridays. So keep your eyes and ears out for that one.
What's the first one you're doing this week, mate?
First one we're doing this week, we're going to be talking a little bit about RVP, vapor pressure.
He was a wrestler, wasn't he? No, that was Rob Van Dam. I remember him. God, I'm showing me age.
RVD, not
RVD. Yeah. No, I look forward to that. That's going to be good. It's about read vapor pressure on gasoline. Yeah, okay. Anyone who's taking a chemistry degree right now, I know you're subscribing. If you're not, you have to subscribe. Then you won't miss this content.
And hurrah to Wales for making it into the elimination rounds in the Rugby World Cup. First team to make it in. Gotta like that. And good luck for you tonight.
Cheers, mate. All right, lovely. I'll see you all next week.
Take care and have a good day.